One, you're tuned in to Agriculture Today, and we start our Friday show with a grain market update with K State grain economist Dan O'Brien and the senior economist at the IGP Institute, Guy Allen. Dan, Guy, thank you both so much for taking the time to join us today.
Thanks, Shelby.
Starting off our conversation, Dan, as we usually do, with what are futures looking like?
Well, of course, we came out of last Friday's World Ag Supply Demand Estimates report, and it didn't have any major surprises in it that dramatically changed things. So we have had kind of continued weakness, really a sideways move in the markets since Friday the 12th reports. You saw on yesterday, on Thursday the 18th, that September futures closed at 391 and a quarter, i.e. below 4, and D's corn 405. So you got about 4.5 cents per bushel carry over that time frame. But the point being that the futures are pretty weak, and they've been in a pattern of basically trading sideways for D's corn, ranging from about 415 to 405. And I think overall, and we'll talk about this more as we get into the reports, that the markets have taken the attitude, perception that, hey, we're into July now, we've got adequate moisture. If there's going to be something that happens, then we'll deal with it when it comes. But right now we are in the assumption of large crops, 15.1 billion bushels or more for corn, and okay grain sorghum exports, but not great. And Guy, I think you might want to talk about that more in a bit. And for soybeans, came out of again, we came out of that report with not major changes. Again, closed yesterday on the August contract, which is now the lead. July's off the board. 1098 and a half, again, just below 11. New crop November 1043, so trend about a 58 cent fall from where we're at right now at the end of the in the growing season down into what they're looking at in November. Of course, international availability of soybeans coming out of South America, especially Brazil, that play there also. And I'd say for wheat, pretty much the same thing, pretty much the same move, although some ups and downs. That report was viewed pretty bearishly. That the USDA came out of that report finding more wheat than had been anticipated by the market, and not just by a little bit, by quite a bit. So the supply demand balances have grown, and so we saw on Friday, September hard red winter wheat closed 562 and 3/4, D's 579, and so again, you've got a little bit of carry from I guess September to D's, but nothing great. And I think the cash prices following this same trend are well, I guess it's kind of a tale of two different issues going on. First of all, with the futures sideways to lower, you have generally pretty disappointing cash prices. However, you do see, especially on corn, basis improving. You've got a 45 over cash basis in the Colby area, and the Garden City area 65 over, and really the top bids in each of these areas are all positive, over par for the futures. And a new crop bid out in Garden City of 51 over at 456, even money in Colby. So note the best bids are in Western Kansas, at where the feedlots are and some ethanol plants. So that's just standing to reason. If there's anything that we've seen in recent weeks, it's a weakening of the upfront contract basis for sorghum. Again, we still have some sorghum exports, but not the bull rush moves that we had earlier. So that's reflected in that balance sheet. Again, I'll talk about that in a little bit. Soybean bids, top soybean bids around the state, cash markets all at or all below, or just below, or more so, of $11. So they're all running 1048, 1029, 1093, 1098. The weakest out in the Colby area below 10 at 988. New crop bids, the strongest new crop bid out in Hutchinson over $10, just by 1003, but everything else, again, basically mid 9 to a little bit higher. And for wheat, we just have finished up harvest. Weakest bids again out in the basically in the northwest, southwest, southeast parts of the state. 550, 558, 578. The best bid continues to be out in pardon me, in the Hutchinson area. So not a lot going on. And weather, Guy and Shelby's big issue. There's international weather to be wrestled with, but domestically we've had rains. We talk about our different experiences. I drove through the Iowa, southern Minnesota area here in this last week, heading up to Minneapolis for business up there, and saw generally mostly good corn, nothing dry, that's for sure, but a lot of uneven corn. That's an area where everything was planted late, and well, most of it was planted late. So if there's an issue to wrestle with, it's that yes, the crop ratings say we're doing pretty good. We're not dry, but we have some uneven development up in those northern states, and whether we actually get to the USDA's projections for high yields or not for corn and for soybeans probably will have to do with some of that type of unforeseen stress right now.
And wanting to continue our conversation on the grain market and taking a little bit different of a look, but looking at corn and sorghum from that WASDE report that came out on the 12th.
Yeah, so Guy and I both have a hand in this. So I'll talk about the domestic side first, what that showed, and then turn it over to Guy for what he'd seen internationally. Then we'll bring that back together for both of us. So the supply demand balance sheet for corn really I think hinged on what the yield was. And again, the USDA, by their approach, had made no changes in the 181 bushels an acre figure that they've had for several months now. What has changed is that that whereas expectations generally were lower than that, or at least open to considering something lower, previous record high 177.3. Now you see projections even by Greg Ivandahl out of our shop out of KSU based on crop conditions, pretty much matching this 181. So if that actually comes about, given the lower acres that we have, even with the June 28th numbers, we still have lower corn acres than we'd had before. And if that comes about, then we're looking at ending stocks at still around 2.1 billion bushels for the new crop marketing year. We did have some pretty good use in the old crop marketing year that dropped ending stocks for 23-24, raised them coming into this pardon me, and caused for lower beginning stocks coming in to that marketing year, so into the new crop marketing year. So you got that situation. So I guess all hand waving all aside, still nothing optimistic really, other than some higher use than had been expected on old crop that affected the domestic side of this. How about the international side, Guy?
Well, internationally on corn, not too many changes there, but it was probably a little supportive. Non-U.S. coarse grains output, they lowered by 4.5 million metric tons from the June report. Beginning stocks were a little higher. Non-U.S. corn production was lowered nearly 2 million metric tons, again, with beginning stocks sort of a little higher. The key changes there, USDA reduced Argentina's corn crop by 1 million tons to 52 million metric tons, and their exports reflecting that lower number down to 37 million metric tons. Looking at Brazil was left pretty much unchanged at 122 million metric tons of corn, and with about 50 million metric tons of exports. Interestingly enough, the Ukraine exports for corn were increased 2 million metric tons to 28 million metric tons. For that key buyer, China, for this 23-24, the remainder of this year was unchanged at 23. And they also left 24-25 unchanged at 23 million metric tons. I'm a bit optimistic that they may raise that China number a little bit higher, given anticipated increase in feed demand domestically there in China. Mexico imports optimistically were up about 200,000 metric tons. South Korea up 1,000 metric tons higher. Canada up 500,000 metric tons. So that sort of helped things. Russia's exports were down 400,000 metric tons, as well as EU down 200,000 metric tons, which for this coming crop year should at least we seem to have stopped the bleeding on the prices. With corn, we've dropped 70 cents since this time last month in June. Pretty hard drop, pretty quick. But since the USDA report, it seems at least we're on life support, and we stopped the falling numbers. So it'll be interesting to see where we go.
Yeah, and this last week we had we've had some pretty decent corn exports. Coming to the end of this marketing year, I'm not sure that we'll catch up with the USDA's full projection, but yeah, Guy, just would add to what you talked about. Mexico is such an important issue for us. I think within the last week or so, there was an announcement that they were, I think, backing off of some of their non-GMO corn goals anyway. Any thoughts on that from your perspective?
Well, I think we're projected to have record exports to Mexico this year. That's being supported by the dry weather they had last year in production and shortfall there. So puts them in kind of a difficult situation if they want to limit corn imports on the GMO issue. The change in the political situation, I don't think it's necessarily changed their attitude much, but at least they've backed off of their previous approach, and I'm optimistic they'll come to the table on sticking to the NAFTA agreements that were in place.
So with that, I noticed that the USDA did drop the projected grain sorghum exports from the for the next marketing year down to 245 from 260. So now it'd be the same between the years. And grain sorghum people have some thoughts about that, no doubt.
Yeah, look, I was out at a sorghum meeting in Garden City earlier this week. Yeah, exports were down 15 million bushels to 245. Domestic feed and residual steady at 70 million metric tons, as well as feed, seed, and industrial at 45. Yeah, not too many changes there in the sorghum situation. Again, China's going to be key to that. And I think if they increase their corn imports, which I'm optimistic on, the key thing was that with the sorghum situation, once they reach the tariff rated quota of 7.2 million metric tons from the U.S., the import tariff moves from 1% to 65%. And half of that sorghum or better going into China last couple of years has been attracted into that feed market as sorghum and barley both move into China with no quota and no tariff.
We're cutting to a short break now on Agriculture Today, but when we come back, we'll once again be joined by Dan O'Brien and Guy Allen.